Now, earlier today, Lonmin announced that it has agreed to enter into a $200 million metal purchase agreement with Pangaea Investment Management. The platinum miner says that the facility will provide increased liquidity. Joining me for more is Ben Magara, CEO of Lonmin. Ben, thanks much for your time. And of course, we are joined by our regular market watcher today, that is Nesan Nair, who is the Senior Portfolio Manager at Sasfin Securities. How rude. You know, so sorry. Apologies.
It's a pleasure to be here.
Great. All right, Ben, so you've announced this new, is it a streaming-like deal similar to what Pangaea had announced earlier on this year? Explain to us exactly how it's going to work.
It's a metal purchase agreement. So upfront, they pay $200 million to our coffers, which allows us to extinguish our $150 million term loan with our existing lenders. But it really works on us providing for the next 3 years a stream of metal in the ratio of platinum to palladium of 69 to 31%, which means possibly about 8 to 9% of our annual volume would go to paying for this facility.
Just on that streaming agreement, the announcement said that Pangaea needs to make a 15% margin, or would that mean that you would sell to them at a 15% discount to the metal price at the time, or how do they get to make that margin?
The metal price is at spot, and we agree on certain volumes, and those volumes should allow for a 15% return on that. As you would have possibly seen from the announcement as well, we have allowed for Lonmin to exercise its right. If we decide in a year that we would rather extinguish the $200 million, we could do so. So that allows us that flexibility, but it de-risks, particularly it de-risks Lonmin as a business. It's an additional $50 million of liquidity. It ensures that some of the facilities, the tangible net worth covenants that we have with our existing lenders, and some of the conditions around 20 days, you must come up with a plan if something goes wrong. All those falls away. But also in the hands of Pangaea, we had to make sure that when the transaction closes, as we expect it to, we'll make sure that it also does not sit breaking any of Pangaea's covenants.
Right.
So it's really a very innovative way to make sure we had an upfront feed to Lonmin's liquidity.
Right. But then just how much does this improve your cash position, or rather maybe take your short-term cash constraints or the headache you have over your short-term funding away? How much does it?
I think the one thing to say is that we are 14 quarters since the rights issue of 2015. And for the 14th consecutive quarter, we remain net cash positive. As you would have seen from our Q4 production report, our net cash has increased from last year, September, of $143 million. It's gone up to 114, thanks to good operational performance in all areas of our business, which I'm particularly pleased with. And also the favorable rand, that has been very helpful. So, and the metal that we had in stock has been released, so we're able to actually generate even more cash.
Sure.
So from a net cash perspective, we remain net cash positive and improving. But again, this provides us with the working capital requirements. And normally Q1, which is December, January holidays, our working capital drain is much more than in normal terms. So we expect that this $200 million will be useful in the working capital management of the business.
Sure.
Just on, firstly, I mean, I don't think we congratulated you on managing to actually increase production slightly for the year.
Thank you.
Yeah.
We all know what a tough environment it's been out there for mining, and with the safety issues and the volatility in the currency, you know, it's not an easy business. Just your thoughts on the tie-up with Pangaea. We have competition tribunal approval, I think, sort of mid-November. Are you looking forward to it? Or what are the expectations on Pangaea's side? Will there be any big operational changes maybe we should be aware of?
I think you say well done to the operational performance. I must equally say so to my 32,000 colleagues for having worked so hard. We have achieved 15 months fatality-free, which is the first for Lonmin in the mining industry in terms of fatality-free periods. So we're very pleased with our performance all round, whether it's operations, closing old and depleting mines, making sure that the future mines have got enough capital given our capex constraints. So that continues to go well, and I'm really pleased that we can continue to do that. On the Sibanye transaction, we have had the Competition Commission recommend the deal, and now we are looking in, the tribunal is sitting from the 12th of November. We expect, therefore, as you say, that the tribunal will have its ruling possibly 10 or 2 weeks down the line, which would then allow us to go to both our shareholders, Lonmin's shareholders and Sibanye. And on completion of the 2 shareholder votes, then go for court sanction, because it's a scheme circular for the UK in the laws of the UK and England and Wales, and then we close the transaction. The long stop date, which is 28th, 29th of February next year, we would expect that all this should have settled by then.
Right. I mean, Ben, on to your production performance, or staying with your production performance still, I see that sales increased by more than even your own guidance.
Yes,
and I'm interested in the fundamentals, what's going on in the platinum market right now. What is driving that demand?
Right. The demand remains available, but the customers, obviously, when the prices are low, they would rather possibly have more. Okay. The reality is it is crucial for the supply industry, like ourselves, to reduce high-cost production, to remove oversupply. Otherwise, the price tension doesn't come back. So Lonmin continues to shut down its high-cost Generation 1 shafts and starving it of capex to make sure that we actually continue to reduce production, which unfortunately results in retrenchments that we have always announced, and we continue to do that. So we expect that if supply discipline continues and Lonmin continues to do its part, then we will see the demand-supply tension coming back. We have seen the benefits on palladium. The palladium prices for the last year have been very positive. We remain upbeat about that. Mm-hmm. Rhodium has also been going quite well. So as a basket, our basket price in rand terms is actually better, but the platinum price has not come through. So it means particularly South African primary production needs to continue to come down.
Nesan, I don't know, Lonmin, given its performance right now, it's improved. You congratulated Ben there right now. Is this something that you'd be picking up?
Listen, you know, it's just a shame that, you know, it's been taken over now by Sibanye, because it was one of the producers that was really quite leveraged to an improved PGM, platinum group metals upside. Absolutely. I mean, I think the basket price went up something like 19 or 20%.
Yes, it did.
In an environment where we had a relatively strong rand in the beginning of the year, you know, so no real help from the exchange rate. You know, it's always going to be a question about your view on precious metal pricing in rands. But right now, you know, it seems like Sibanye is consolidating a lot of the platinum counters, and that might be one to hold for the future. One to hold for the future,
but of course it's against the backdrop of a challenging mining industry. Although policy certainty has resumed on your front with the latest mining charter that the industry as a whole seems to be in agreement with. I just want to get an understanding from you. I mean, it's a big week, actually from the both of you. It's a big week for South Africa. There's the budget, that investment conference on Friday. What are you guys hoping for? Ben?
I think if you look at the mining industry, particularly the mining Charter 3, we are particularly pleased about the proactive engagement that we've seen from the DMR of late with Minister Gwede Mantashe, who understands the mining industry, who is clear, who would want to also see success in the mining industry. So that certainty is beginning to come through. And we have all cheered as a Mining Minerals Council of South Africa to make sure that we can play our part, because we definitely can play a bigger role. The markets will improve again. Maybe in our current circumstances in the platinum sector, we might not be able to do so much, but the markets will improve again. That's what a cycle is all about. So the certainty brought in by this mining charter and by the new minister is extremely encouraging for the mining industry. And of course, we've got the investment conference, which I'm part of, and also the midterm budget process. We also expect that there will be good signs of where South Africa needs to go. And but you know, as I said, the platinum cycle will turn again, will improve, and we're very upbeat with the certainty that is provided by the ministry.
Sure. I mean, Nesan, your expectations for the medium-term budget?
I think, you know, the investor community out there is looking for much more cooperation between government, labor, and the private sector. And in mining in particular, you know, because of the history, but we need some sort of policy environment that fosters a culture of trust. Government's not going to get us out of this this recession alone. They're going to need help from the private sector, and the private sector is going to need help from labor. How we achieve that, and I know that's the blue sky utopia, but you know how we achieve that, I think, very much in the hands of policy, and it'll be interesting to see what the minister has to say on that front.
Ben, you say that you're part of the investor conference, the investment conference that is happening. Should we, in light of more policy certainty in the mining sector, do you think that foreign investors will have a feeling for, you know, letting go of some of their cash and plowing it towards, say, for instance, South Africa's mining sector? Or is that being a bit too hopeful at this stage, given the weak economic backdrop?
I think it's more than economic backdrop or the weakness of the economy. Because right now, you would think if you were talking platinum, you need to shrink supply. That is the main driver. So how could the investment community come in and be of assistance? We're looking at market development. How could we bring more fuel cells? How could we make sure any school or clinic 20 kilometers away from a power line is better off with a fuel cell, which is powered by platinum? The Mandela coin is one great opportunity for platinum to get into. We could make a Mandela coin, and I think all of us here would buy a Mandela coin. So it's how do we actually look into market development that could assist us in creating even more job beneficiation projects. Lonmin has got two fascinating projects we're doing right now, again on beneficiation to encourage investment.
Sure.
In that Black Industrialist program, we've got a Takadu project, which is going to purify crude nickel sulfate into battery-grade nickel sulfate in South Africa on Lonmin property in Marikana to make sure that we actually continue to beneficiate for ourselves and create possibly a minimum of 60 jobs from just that single project. So I think there's a lot we can do as an industry to assist, because as highlighted, the private sector can create jobs, and we need an enabling environment to do that.
Well, it's all wait and see until Wednesday and Friday. But gentlemen, thanks so much for your time. We will leave it there. That was Ben Magara, who is the CEO of Lonmin. And of course, we were also joined in studio by Nesan Nair, who is the Senior Portfolio Manager at Sasfin Securities.